trade psychology and effective journaling. Okay, effective journaling. When we talk about doing journals, every single day I make a journal entry in my personal journals. And at the end of the week, usually it's on a Saturday, I do a weekly log in my personal performance and what I have seen happen in the previous week. More or less, I'm reviewing the total week's range. And I do this on the two pairs that I trade, which is predominantly the euro dollar and the cable pound dollar. I don't do a lot of trading in a lot of other pairs. If I want to be a deviant, I will trade sometimes the Canadian dollar or the Aussie dollar. But generally, that's about it. I don't like to do anything more than that. And the reason why is because I actually spend a lot of time planning and investigating certain setups and things that I'm looking at. And I want to go through that time and use that time the most economical way I can. And I don't want to be doing that with 28 pairs. So if I'm going to put the time into doing a sound top-down analysis and or review of my own setups, if I'm following 28 pairs, can you realistically do that every single day? You're never going to have any time to do anything else. So I have a life to live, and I can find all the setups I'll ever want to find in these two pairs. In fact, I could just trade one, but because they're closely correlated and it fits my model as far as a short-term and day trader, I look at both euro dollar and cable. And if I want to find something else that may or may not have a setup in the cable or fiber, then I'll trade, like I said, the loonie or the Aussie. But I try to make a daily entry, whether I take a trade or not, and I give myself an opportunity to stay in a routine. But every single week, I'm doing a complete review of the weekly performance as my trader half of me has performed, and then the analyst half of me. So I'm always giving a voice to the two people that reside in me, just like you are. You all are going to be looked at internally as a trader, but there's actually an analyst inside of you too. And there's also a gambler. So you have to figure out who's in control at the time when you're doing the trading. And many times you don't see it before you go into the trade. You always see it after the trade. Okay, the ones that pan out really, really well and you're not feeling a lot of exposure to uncertainty or fear and anxiety, generally you're going to find that that's going to be the analyst because they're focusing on the numbers and they're not really worried about it. The person that finds themselves excited about the results many times when they're good, or I guess the adverse side of things, they're weighing things in terms of the outcome. That's the trader. And then you have the gambler, where they're impulsive. They're doing things that are undisciplined and they're pushing more leverage than they should. That's the one you want to keep your eye on, okay? The gambler is going to get you in trouble. The trader will take care of himself because the analyst will speak to that side of you through your conscience. But you want to reside in the mindset of the analyst, sticking to what you see in the chart, sticking to what your process is, your model. Okay, the analyst is what's going to keep you on the right path. That formation that makes a trader it's made up of three people, but you're all the same person. The analyst, generally they're the ones that are the most sober-minded. The trader is the one that wants the opportunity and the right or wrong measurement. But then you have the gambler who wants the thrill of it all. And it's also going to be the person that takes the hardest in terms of the grief that comes when there's a losing trade. And that part of you is going to always be negative. It's going to be, well, it's not my fault. It's something else that caused that. The gambler is only going to be worrying about when it was right and when they made money, or when you made money. When it was in your favor, that's when you want to consider it. But when it isn't making money for you, the gambler is going to cry. It's going to manifest itself into a spoiled perspective, toxic thinking. So you kind of like want to keep that side of you on a short leash, and you don't want to allow it to manifest itself in your journaling. For the next best thing, I think this is one of the biggest problems. If you just look at Twitter, whoever's hot right now, whoever's got the most attention by everyone, that's where everyone's going to flock. Okay, and it's always been like that, not just in trading, but in anything. Okay, whoever's barking loudest draws the biggest crowd. Now, whether or not they have anything to say once the crowd gets there, that remains to be seen. But you can see how folks that are in love with one concept or one guru or method this month will change teams and go somewhere else in the thought process, thinking that this is the better way of doing it, or this is something different and it's an amplification of something. And I have learned that there's nothing really better for me as a trader, so therefore I don't look anymore. I know everything I need to know in terms of price action, the open, high, low, and close. Tells me everything I need. There isn't anything out there that entices me personally. And like the Bible said, there's nothing new under the sun. So if I have arrived at something that makes sense for me, even if it's not perfect, I don't need perfect, but I know I have a statistical edge in the things that I do. They're highly accurate, they're very precise, and they're time-based. I know when my setups are going to form. If you were able to poll the majority of individuals that were trading any asset class, if they could set a time on when their next setup is going to be, over 90% would say, I don't think so. I don't think I could do that. And that's why trading's uncertain. To me, it's not, because I know what time of day certain things should happen. I know what days of the week certain things should happen. So therefore, I'm not anxious about when my next setup's going to be. I don't care about missing a move. In fact, it's fruitful for you to take vacation time, scheduled time away from the marketplace, and do that. And I would suggest to do that even more so if you're hot right now. If you're doing really, really well, best thing you can do is forge development in terms of your discipline and also your experience. Force yourself to say, okay, I'm taking a break now. I've been killing it. I got 25 winning trades in a row, or whatever it would be. I'm going to stop trading and I'll take a week off. Don't even look at the marketplace. You're going to want to look at it, but don't. By doing that, you're going to prove to yourself there's nothing better than the thing you're doing right now, because you understand it. It doesn't have to be my material. If you found something in another discipline that you've really gravitated towards and it made sense for you to use it, great. That's awesome. That's all that matters, is that you find something that you can make a wager on, and then wager that with sound money management. Because ultimately, no matter whether we're talking about order blocks or ICT breakers or anything else that's out there, none of that stuff really makes price move. And we can't control price once we're in the trade. Once we're in the market, all of the control, the steering wheel, is not ours now. The market's driving what we're going to see in terms of profit or loss. So understanding that everyone's going to have losing trades, and the first thing that happens is folks that go through a losing streak and they experience drawdown, then they show their lack of discipline and following rules, so they think there's something better out there. Okay, something easier, something that doesn't have losing streaks. Everything has losing streaks, folks. Believe me, everything does. No one stays hot or the top forever, and there's always going to be some measure of drawdown in whatever system or method you're using. So the best thing you can do is find something that works enough time to warrant investigation and stick with it. Use sound money management, and you can turn it into something really impressive, and you may even surprise yourself. Lack of discipline and following rules. Well, it's in our nature to be human, and I've said this many times, if the sign says don't walk on the grass, your first impulse is going to be what? I'm going to tap dance all over that. So just like your children, God bless them. I have 4 boys, and I have literally watched them do these very same things that they should know not to do, but they still do it. Well, with an account, with money, or a demo, we do those same things. We know we shouldn't be doing something, but because there's an opportunity to do it and there's really no one keeping you from doing it, you end up doing it. And as soon as you enter the trade or mess around with your trade like you shouldn't, as soon as you do it, that little voice in your head says, I should not be doing this, or don't do this, but you ignore it. You want to see what's going to happen. And if you want to do experiments, okay, do it somewhere else, not in the marketplace. But you have to have discipline and you have to have rules. And when those rules are made, you have to stick to them. Do not deviate from them. And over time, this forges discipline, and it'll also serve you well because you're going to have periods of drawdown. You're going to have periods of losing trades. And if you don't have the discipline to stick to doing the very things that will eventually lead to longevity in this business, you're not going to fare well. So discipline comes by forcing yourself to follow a set of rules, and those rules have to be rigid. They have to be concise, detailed, not ambiguous. They're very binary in the sense that you do this or you do that or you do nothing at all, and they have to be 3 conditions for every decision-making process. Either it's a go, it's a no, or you sit still and you don't do anything. Fear of losing streaks and drawdown. Well, this is going to be directly related to money management. And if you're afraid of taking losses in any set or series and or fear drawdown, it's because you have no process or protocol in place or what you would reach for should you have a loss or a losing streak develop. I've given you a teaching to help you flatline your losses so that way it removes the effects of drawdown in your losing trades. And by implementing something as simple as that, quickly changes your perspective on fear and anxiety about taking losses or a string of losses. Fear of not being good enough. Well, this is a byproduct of being on social media. Everyone's going to be better than the next guy, or they're going to be trained by the person that's leading the pack, or they themselves are, the rock star. If you are not equipped to handle the tomfoolery that takes place on social media like Facebook and Twitter and Instagram, it's probably better for you not to be on it. Now, I understand that I have a online presence on Twitter, and I have a Facebook, and I have a YouTube channel, but I have a thick skin and I like to engage other traders because I like the feedback. I like to see what their responses will be, and I just like the engage. So if you are quickly feeling like you are not sufficient, or your learning speed is not up to snuff in terms of what you've seen other people, and many times what you see online, they're lying anyway. They may say they have their things together, they're all completely figured it all out in terms of what they're doing. Many times the ones that are saying that aren't really as astute as they claim to be, and they're trying to fake it until they make it. So don't let it wear on you too much, or make you feel like you're insignificant in terms of where you're at in your development, because your report card on your own results, as you'll hear me refer to in the journaling section of this video, that's the only opinion that matters. It's not mine or anyone else's that matters. It's, are you seeing development progress? And by measuring that and by keeping tabs in that in terms of your journal, that's the scorecard that really matters. And obviously your bottom line, that's the one that really makes the case for whether or not you're developing. So fear of not being good enough is simply a game that's between your ears. It's all a trap. So don't think about being on social media. Don't engage other people, especially if you're a developing trader. The worst thing you can do for you men is to go into this arm wrestling match about, what's better, who's better, how much is, a good amount, and what you should be making in terms of pips. All that stuff goes back to the proverbial measuring contest. Who's the bigger man? And it's not about who's the bigger man. It's about surviving long enough so that way you can appreciate and develop as a trader. Impatience between setups. This is going to come by way of infancy as a trader, especially if you have a setup that is profitable and you can be well organized, you can have a well groomed money management strategy, and you know what your setup is, but you're impatient in waiting for it. Or you see the setup forming, but you're trying to get in just before you're really supposed to. In other words, you're looking for a specific level, you're looking for the 50 level to be buying at, and it's flirting with 65 and you just can't stand it. You just got to get in. That's going to be dealt with over time and forging discipline by following the rules in your method. The problem is you don't have the time doing it enough and the experience trading to know what this is going to require of you. And you're going to have many times previous exposure, either by demo preferably, or if you eventually go into live trading, which I don't ever try to tell anybody to do that because it's a decision that you're going to make on your own if you ever do it at all. But if you find success, that feeling or that rush you get when you make a profitable decision, you want to have it right away, as quickly as possible, and many times immediately. As soon as you close the trade or it hits your limit order and you're out with a profit, whether demo or live, worst case scenario, it's a live, you're going to want to go right back in again, and you're going to jump in before your setups. And you're going to take things that aren't your setups. And I can tell you, as a commodity trader, when I had initial luck back in the early 90s, I would have an idea what I wanted to trade, but I would also feel that impulse to want to get back in and be a winner again. So I would look at the market and say, okay, well, that's not my setup, but I still think it's going to go up. And I would buy it. I had no idea what I was doing, but I still succumbed to that impulse that, hey, look, I need to be doing something because I'm sitting in front of the charts and I want to feel good again. So let me roll the dice and see what happens. That impatience comes by way of your infancy and your lack of experience. Experience is going to teach you one of two things. One, that losing sucks, and it's better that you try not to lose too much when you do lose. Or experience is going to teach you that you're not perfect, so therefore you have to wait for the best scenarios for your quote-unquote luck to be in favor. We don't know if our setups are going to be accurate, but we also don't know if our setups are going to come when we're expecting them to. So forcing it or jumping ahead and more or less anticipating the setup, whereas we're anticipating a next move in price. That's what trading is. It's a statistical guess. Now, with that, there's a measure of uncertainty. And that uncertainty and the waiting side of trading, it's just like a water torture. Okay, you can't stand it, especially if you're sitting in front of the charts. You just want to get in the trade already and accept the wider risk if you need it. And that's wrong. You don't want to do that. Demand your price, demand your setup, and by doing so, you'll combat that impatience that resides between setups that novice traders always feel. Fear of losing. Well, this one's going to have you looking for systems that have high accuracy, and there's not a real need for high accuracy. It's wonderful to have it, but the fear of losing comes by not having a plan. And if you don't have a plan, if you don't have a method that's seen consistency in hindsight and backtesting, and then walk forward with it, seeing it working and then having momentary lapses of accuracy, you will not have the wherewithal that's necessary to do what is necessary as a trader. That means embrace uncertainty. The ability to do this is not going to be for everyone, and there's going to be a fine line between those individuals that hit this wall that every one of us will hit, and we have to determine for ourselves if this is really right for us. And for some of you, it isn't. No one's going to be able to make that decision for you, but it's important that you understand that there is always that element. If you're a new developing trader and you're unproven, it may be that trading isn't for you. You would have to more or less rely on someone else to do the trading for you, or don't trade at all. But if you're going to trade, you can't fear taking a loss. Fearing a loss is many times directly linked to over leveraging and or over trading. Both of those two elements are very easily fixed. Lower your leverage and you won't be so fearful about taking a loss because it won't hurt you so many times in a row if you have a losing streak. If you slow your frequency down in terms of your over trading, again, even if you're not trading a high accuracy method or setup, the high frequency won't be quickly eroding your equity. Very simple solutions to an otherwise rather routine problem that comes up in many traders. Some major psychological barriers. First on our list is the fear of missing moves. I believe this personally is rooted in not fully understanding what your setup is. Now, you see this glibly tossed about in seminars, webinars, videos, whatever it is, folks that are teaching today. Many of them aren't even qualified to be in the role of a teacher, in my opinion, but we'll leave that for another discussion. The fear of missing moves is rooted in your unique setup. Now, every trader is going to have their specific setup. It may or may not have an indicator. I personally don't believe that indicators should be a part of your trading, but that's just my personal taste. My faith in price action is sufficient enough. But if you have a tool, if you have a method, if you will, that relies on an indicator to give you that buy or sell decision for you, then whatever it is, you need to stick with it and know that that's the one you're going to trade. If you have defined that setup in a written form, in other words, a trading plan, you're not going to have many times that same feeling a neophyte trader or a less organized trader would have. Now, it doesn't mean that we're going to be profitable. It just means that we're not going to be fearing missing a move. Because once you understand the setup should be directly linked to time and price. There should be a time when this setup forms, and there should be a consistency to it. If your pattern doesn't have that, and it's rather ambiguous or untimely, you don't know when it's going to happen, then you probably don't have a valid setup. And you're going to have hit and miss results, and when it wins, you're going to falsely attribute it to your setup when it's really just randomness. So to overcome fear of missing moves is obviously to have a well-defined plan and what your setup is. Knowing it intimately will keep you far less anxious about missing a move because you'll know when they're most likely going to form. This is why I use kill zones. This time element of the trading day, I know what I'm looking for. I know my setup. And if I know what time it should occur, I know on what days of the week it should form, and I know it should be either a bullish model or a bearish model, I'm not anxious about missing a move. Even if I do miss that trade, I know when the next one's going to form. Most neophyte or novice traders do not have that luxury. They're on the seat of their pants all the time, not knowing when it's going to happen or what it is that's supposed to happen at all for them to take a trade. And here is the kicker. When you do things messed up, okay, and you do the wrong things and you make errors, you want to avoid negatively charged words. Wherever you struggled in the execution or the application of money management or your leveraging, or if you overtraded, you do not want to say, oh, I'm a stupid so-and-so, or I am a failure, or I'm never going to get this. Do not do those things in your journal, because your mind will latch onto that. And whatever you use negative words on, your subconscious is going to see that and say, okay, well, this is a problem or it's a source of stress, so I'm going to avoid it. So what's going to happen when you look at the charts? subconsciously your mind's going to say, this is stressful, I want to avoid this, and you're not going to pay attention, and or your mind is not going to let that setup jump off at the chart at you, so that way you can engage it properly. So it's very important not to use negative terms. So while this is not an exhaustive list, I wanted to have some measure of journaling suggestions, and I wanted to have some measure of psychological solutions. And both of these topics can be really explored in greater detail, and it comes by personal experience. And while there's a lot of books written about both the subject matter that I mentioned here tonight, I don't think it's something that you need to make any more complicated than what I have here, because this is really the bare bones of what I've done for 25 years. And the best trading book out there is the one you're about to write in your journal. That's the best one, because they're going to be directly related to you and your own experiences. You can't teach your experience to someone else. You can talk about it, you can share it, you can share your journal, let them read it, but it still won't have the same impact that your experience has for you. And that's the wonderful treasure and, well, secret weapon, if you will, of a trader by using a journal. It seems like extra work. It seems frivolous. Oh, I got time for that. Who does that? Well, I'll tell you who does it. Winning traders do it. And we know what we're looking for because we've studied it. We've had days and days and days on end where we have recorded the same exact setup. The same winning attitude that we went into is always there. So these are all signatures. These are hallmarks of classic setups. So that way when you start feeling a certain way going into the market day, if you're not on, you'll know it, and you'll be honest with yourself and say, okay, I got to not be in the market today. I got to take a day off. Otherwise, how would you know those things? Because you're going to talk yourself into taking a trade if you're feeling bad. That's the normal response for a human. Distract me. I need a distraction. Well, what's a better distraction than getting money? Nothing. So you want to play the lottery. It's time for casino. So